Good evening, ladies and gentlemen. Welcome to Ask Grit, episode number 45. We are nearing a half century. We have Donald from our Melbourne office.
Hi, ladies and gentlemen. Waiting, going through the questions we've received lately that are in these dynamic times. So, some good questions I've already received and coming in as we speak.
Yeah. So just before you start, the first time viewers, we do this program every single week. It's a weekly live Facebook live stream done by our own members. We're discussing questions which we get asked on that particular week, so that as viewers, you can pick up one or two golden nuggets, hopefully. The whole intention is to add more value to you by answering these questions. If you have any further questions, please put them on the chat or on the Facebook Live, and we are more than happy to answer one after we go through all these questions. Okay, let's start. Donald, what have you got?
All right, so this is a question that came from a customer of mine a couple of days back. A few customers have asked me this question lately. Interest rates are said to rise soon. Is this true? And is this a good time to invest in property? That's a bit of a paramount question right now with this uncertainty ahead, but we shall go through this.
Yeah, sure. That's the most common question right now. Yes, the interest rates, the fixed rates have started, and inflation with the economic policies and so forth, interest rates has to rise. So it will rise. I don't think it's going to rise a whole heap. I mean, we are right now, the Reserve Bank cash rate is at 0.1%. It is all-time low. And I don't think none of us can expect that to remain the same forever. It has to rise, and it will rise at some point. Whether the property is the best time to invest? Well, depending on where you are in the property investment journey. If you have been waiting for some time, it's definitely the time for you to invest right now. It really depends on where you are at, how many properties you have got, what your circumstances are. But delaying a property investment decision is definitely not the right thing to do. Interest rate rises are just one aspect of the whole game. There are so many other things which you need to look at when you're investing in properties, and interest rate rise is not your decision should never be decided on just by interest rate rises. So it's just a fragment of the scheme of things. If you have not invested at all, definitely it's the time to invest is not today, it was yesterday. Because you've got to be looking at the long-term game, not the short-term game.
Absolutely, yeah, absolutely correct. And the interest rates are the lowest they've ever been through history. So them going up is not going to change the trajectory of growth of property values. Question number 2, is investing interstate effective, and what are the benefits of doing so? This is from Diane, who's a customer I know, so he sent this in.
Yeah, investing interstate is definitely recommended. That's use your land tax based on your portfolio. At the same time, you're going to minimize your risk in investing interstate, and there's a whole heap of benefits. And at the same time, each state has its own property cycle. So having diversified portfolio across all the states of Australia will definitely benefit you, because, for example, right now, Brisbane, Adelaide, Perth, all these 3 states are really, really hot. And those property cycles are different to Melbourne and Sydney. So having diversifying your investment property portfolio is definitely a must do. And where you invest in that particular state, and that's where we are the experts on. And that's why we can help you on finding that right spot in that particular state.
All right, thank you, Naveen. And also the fact that you don't put all your eggs in one basket, as we discussed all throughout diversification of investments. And also another factor I can add into that is you minimize your land tax in each state. So when you invest in the state, your land tax is forfeited rather than investing in the same state. That's just my view of it. Question number 3. Yes, another couple of questions are coming in. This is becoming longer, Naveen, so you're going to have a while on being live. How have the Queensland, the QLD and NSW floods impacted the property market?
Yeah, I mean, the floods and the rain, thoughts are with everyone who was impacted. It was quite devastating to see the floods, especially on the east coast of Queensland, as well as the northern rivers of New South Wales. Now, the floods will definitely have an impact. There's no doubt about it. And how it's going to impact is in twofold. One is if someone asks, I have already bought a house and land package in Queensland, is my land being flooded? 99% of the estates, which most of our construction is going on, has not been flooded because these are out of the flood zones. Having said that, they have been impacted by the rain because in terms of the development, they couldn't carry out any work for the past month because it has got impacted from the rain. Nobody could work. So things will get delayed by a month or month and a half or two to get things into completion. But with the floods coming in, there is a significant impact on the supply of the property market. We have had across all states, there's significant issue in terms of the supply. If someone wants to buy a title block of land, it's extremely hard, and it's extremely competitive, and it's especially in Queensland, and it's the same with Melbourne and Sydney. And now this supply issue has got worsened by the floods because the supply will become tighter and tighter and tighter. So this is from the positive side. As you can imagine, the demand is extremely high because the supply is low. For a property investor's point of view, it is good and bad at the same time because you can't pick up a property when you want to buy it. With the floods, there will be an issue on the supply of the properties. That's the main impact. Apart from that, in terms of there are stories going on and the market is going to crash because of floods, those are never going to happen because the fundamentals are strong. It's a supply demand thing, as always. So there will be an impact in terms of the timelines, in terms of the developments, in terms of the supply, but it's not going to have an impact on the flood. Will come and go, but the properties will stay.
I know. Like that article I published on LinkedIn, on my LinkedIn, about a street that was hard hit by the floods, and the property on auction went way above its reserve rate. So even though it was flooded, even though it was inundated with water, the auction went ahead and it got far more than their reserve price was. So, come hell or high water or pandemics or floods, property prices keep rising. All right, question number 4, Naveen. Are the COVID effects easing in a good way and in a bad way? Question mark. This is a customer who has sent this. I don't know exactly what he means by that. I would let you assume that or perceive that, Naveen, and
talking about COVID. I don't think anybody cares about COVID anymore. Nobody cares about the numbers. Nobody cares about anything, and people are normalizing. And if the question was how is the impact on the property market, even during COVID, the property market was hot, and there's no impact at all. Things are being normalized. People are meeting face to face. People are not scared to go out anywhere, and things are back to normal, I would say.
So things are easing off for sure, in a good way. And we are shining bright in the world. In the world, Australia is shining bright because as much as we think COVID numbers were high here, they were not in comparison to some other developed nations. So COVID will increase the number of people who want to live in Australia. Okay, question number 5. Where might be the best place to buy right now? I think what he means with all these dynamics in the market, the easing off of COVID and all of that, where is the best place to buy right now? That's a very wide question.
Yeah, I mean, there are a lot of good places if you're depending on where you want to buy or if you want an overall recommendation. Right now, there's few good spots. If you're looking in Victoria, the regional suburbs are extremely good. As I said before, there's a huge lack of supply in terms of land. At the same time, Adelaide is performing extremely well, and it will perform very well for the next 5 to 10 years. So Adelaide would be a top pick. Brisbane, you can't rule that out. Floods will come and go, as I said before. But remember, Olympics is happening. There's huge amount of spend is yet to happen over there. So Melbourne, regional towns of Melbourne, Brisbane, Adelaide are the places to watch out for.
Yep. Floods will come and go. Prices will continue rising, definitely. Okay, another question, a bit out of topic. When you're investing, what do you mean when you say full turnkey and fixed price?
Right, that's a good question. When we say full turnkey and fixed price, which means the price is fixed, you might sign up a contract, you might sign an off-the-plan house and land package. If it says fixed price and turnkey, that means the price will be fixed. What you sign up for now and paying a deposit, that's fixed, and that's not going to deviate just because there is more time for the land to be titled. And what it means by turnkey is up to the level of landscaping, fencing, blinds, to the windows, antennas, clothesline. Pretty much everything is done where you can turn the key and rent it out. So that's what it means. You've got to be careful when you're looking for house and land packages. There are some packages which doesn't have the full set of inclusions, and that can be a headache as an investor, because if you have to do your landscaping, if you have to do your fencing, that will go from your pocket. And as an investor, if you can put everything onto the loan, that's going to be perfect, because that you didn't have to put money from your pocket. So leverage the finance and go for a fixed price turnkey package. That means you have less headaches and you're definitely utilizing as an investor.
Thank you, Naveen. Thank you. Then question number 7. What effects will the Ukraine war have on the property market in Australia?
Yep.
That's a good question.
Russia is invading Ukraine as we speak. I mean, all across the world, there will be an impact in terms of inflation, and we have seen that already. Ukraine has about, 40% of the economy is through oil and gas, and so they have a very, very strong foothold on it. If they shut off gas to the world, it's going to be not going to be a pretty sight. So, this happening, oil prices are going to go up, which is already happening right now. It can further go up, which means there will be inflation in the economy. How that would impact the property market is when the inflation goes up, the interest rate has to go up too. But having said that, Australian government will never put the interest rate to a level which is not affordable, because it's going to harm the economy much more. So interest rates will definitely rise, but not to a degree what people are thinking. So that is the impact. The inflation will rise, interest rates will rise, and that is what's going to happen. It's not going to create a whole crash or anything like that. Market might get stagnant towards the end of this year or get flat, which is the normal property cycle.
There's nothing to worry there. It will be all risks or damages will be mitigated, and it minimum effects the war is going to have. Is it, Naveen?
Economically, it will definitely have impact because inflation will rise. We don't know to what degree, but it will rise. And then interest rate has to rise. Economically, we don't know to what level, but I don't see going to have a major impact on the property market, because it was anyway going to flatten out towards the end of this year.
Okay. But fingers crossed, this won't be much of a war and wouldn't be the World War III, as some people term it.
Yeah.
Fingers crossed, it'll slow itself down and world will come back to normal. Anyway, question number 8. How will the that was question number 8. Question number 9. Have foreign buyers eased off buying through COVID? Has the number of, but I think this means have the number of foreign investors reduced through COVID?
During COVID, there was a reduction, definitely, because people couldn't come in. Now that the borders are opening up, but then we saw a gradual increase. When it was COVID, at the peak of COVID, everyone was scared and there was fear going on. obviously people don't invest. But then things were normalizing, and then people couldn't come. But still, we saw a lot of foreign investments happening. And but now the floodgates are going to be open because people are moving in, people are coming in, and I think foreign investments are going to really rise in the next quarter.
Yeah, actually in my personal pipelines, I can see that has happened quite substantially in the last couple of weeks beyond the borders opening up. All right. Okay. Next question is okay. Again, another question that just came in. Will this World War III coming about? Is it a really good time to invest? What do you think? Tell me truly. It's custom.
World War III or IV, I don't know. But investing in property is always a good time. It really depends on where you're at in the property investment journey, but there's always good spots to invest in. And as I said, each state has its own property cycle. And if you the right location, right state, right city, you can simply cannot go wrong because the fundamentals of Australia is extremely strong. We have only 25.7 million population, which is very, very small comparatively to most of the other parts of the world. And population is set to rise at about 2% per annum. That's you're talking 300,000, 400,000 people moving into the country. As long as there's people, you need property. And right now, there's a huge supply issue. And as long as there's so much of demand, you cannot simply go wrong.
Absolutely, completely agree with that. And like,
yes, it is the right time.
Yeah, populations are growing. The exodus of people, even through war, end up coming to Australia in every single war that the world has fought. And I definitely agree with you, Naveen. Population growing is the biggest factor that property demand will keep rising. Okay, coming to, there are still a couple of questions coming in, Naveen. I hope I'm not taking too much of your time. Okay, this is another question a bit out in the context of investment. What exactly is negative gearing, and how does that really work in property investment?
Yeah, so simply put, negative gearing is, let's say, for example, you go for a mortgage and then your mortgage is $2,000. And then you rent it out, you get a rental of $1,600. So let's say you might have gone for 95% loan to value ratio. So your mortgage is not going to cover, sorry, the other way around, your rent is not going to cover the mortgage. So you have a loss of $400, which means over 12 months, it's about $4,800 per annum, which you're losing on this property. Now, through your taxes, so that is negative gearing. So through your taxes, you can take some money back. So negative gearing, sometimes, I mean, positive gearing is great because you get some cash back every single month. But negative gearing is, if you have negatively geared property, it's not too bad either because you can take it in a positive manner, especially if it's a brand new property. The reason being, especially if it's a brand new property, if you're on a, say, $100,000 income, you might be paying about $22,000 in taxes. And then through the depreciation of this brand new property, it is negatively geared, you can take some money back from the tax return through depreciation alone. And this 4,800, which I spoke about, which also comes as a loss. So you can't get the whole thing back, probably 1/3 of it, but majority of it will be through depreciation. So although it's negatively geared, what you don't understand is if you can get about $8,000 to $10,000 back from that investment property as a brand new property, which you can use towards your own home or towards another investment. You can use that in a positive manner when you think of it as a big picture.
Yep. Thank you, Naveen. Thanks. Okay. Another question that just came in. Okay. You in the seminar I witnessed recently, you mentioned superannuation investment in property. How does that really work? This is from Ryan. You know him, I think. Naveen, you know Ryan.
Yeah. Superannuation, again, it is superannuation investment is a very, very sensitive area where financial planners talk about. We cannot talk a whole lot about it. But if you simply put it, you can use your super to invest in properties. And you can also borrow up to 70% of the property value. And that 30% deposit can go from your super. So let's say, for example, you might have $150,000 as combined super. You can use that money to put as your 30% deposit of the property, and it will be bought through an SMSF or self-managed super fund. It's a huge advantage because one is properties which you buy under superannuation, you don't pay capital gains tax when you sell it. That's a massive advantage. And imagine the best way to put it is, let's say both you and your partner, when you retire, if you say you will end up with about $500,000 in super, you can really double or triple that by using this in investment properties. So it's definitely something you need to get onto. We can definitely put you in touch with one of our financial planners. They can walk you through the nitty-gritties and how it's been done and so forth. But please don't neglect that. It's definitely something you need to get onto.
Just to add on to that, the only way you can borrow money for investment in superannuation or self-managed superannuation is property. You can create a self-managed super and invest what you have, but there's no other avenue you can borrow. So that's one of the best things I think about self-managed super funds and property investments. That's the only way you can borrow against your super. Your leveraging your superannuation for a bigger, an asset with better value than your super itself. So that's a very positive thing about superannuation. Okay, another question that just came in. How can you invest your home equity? I think what it means is how we speak about investing the equity of the home you live in. I think that's what he means.
Yeah. So again, let's take an example. You might have bought this property for say $600,000. If the value now is $800,000, you can take 80% of the equity out and use that as a deposit to buy another investment property, which means you're getting your existing property to talk without putting any money down, which is a fantastic strategy, which we educate a lot of people on. Sometimes people don't realize they have a lot of equity in their home they utilize and go for 1 or 2 or 3 investment properties sometimes. Yeah. So it's definitely something you can get onto. Feel free to reach us out if you need any tips, tricks, and how it can be done. But that's essentially it. You can take the equity out and put that towards another investment property.
Yeah. So a lot of people are sometimes sitting on equity and they don't even know they're sitting on so much equity that they can buy 1, 2, or 3 investment properties off of that equity. We have seen that recently, if you know what I'm talking about.
Yeah.
All right. Any other questions, ladies and gentlemen? I can see someone typing here. Yeah, someone is sending a message.
There's a good question, Dan. What does GRIT stand for? Persistence.
Versatility. You wither the storm. You don't back down. We're grateful, not just grateful, but grateful. There's another question coming in. Okay. So what do you think the interest rates will change to when the change happens?
I think it will go by 0.25 basis points. I'll probably think maximum it might be 100 basis points more than what it is right now if it further goes up, but not more than that.
Okay. So that's actually good, because in all of this time, I know for a fact the highest interest that I have record of was like 4.5%. Now it's not much different from this. So I doubt it will ever, or I doubt in the near future it will go higher than that. When we were paying 4.5%, we didn't feel like it was much. Now that we are paying we're a factor less than that, we feel like 4.5 is high, but we managed. We got through. Even
in early 1990s, it has gone up to about 17%, but I don't think we are nowhere near that.
Yeah.
That's during the recession in 1991, 1992. But then I think it has come down to around 11, 12%. People who have been in the investment game for the past 20, 30 years would have gone through it. But where we are right now is a very, very strong place. So even if you budget your numbers around 5%, 5.5%, I think you'll be pretty good for the next 5 to 7 years.
Yeah. And just correct me if I'm wrong, Naveen. From what I know, even right now, the bank's serviceability calculation is at about 6.5 to 7%, even though the interest rates are so low. So they calculate our serviceability at 6.5 to 7%.
Correct.
That's my understanding. So
Correct.
they estimate your
They always
capability.
have a buffer.
Buffer, yeah. They know this interest rate is not going to last for the next 30 years, so they always keep a buffer.
There's another one, so we'll take this as a final one. Is there any land estates close to Flinders University in Adelaide? Unfortunately not. We get this question asked many times, especially from the parents overseas. There are kids going to Flinders University. It's an established area. Some estates around, I would say, 20-25 minutes away, which is not too bad, but not close to the university.
Yeah. So in the context of Victoria, I compare Flinders from the recon I've done thus far to be like Monash. So it's an established area. There have been a lot of people living around, businesses around, all of that. There's no space for new developments, etc. So of course, actually 15-20 minutes away from Flinders University, there are developments. So it's not too far. 15-20 minutes drive is not far at all in today's context. So that is it.
All right.
I can't see anyone typing anything right now. I mean, I think we can call it a day.
Yeah. So thank you so much for listening in. We do this every single week. We'll see you again next week.
See you, everybody. Hope we were informative enough. Trust we were informative enough.
All right. Have a good night and have a good weekend ahead.
Thank you, everyone.